forbearance pitfall program, mortgage program, whatever they want to call it. And today I'm going to talk about how people are going to get in trouble with the forbearance program and all the pitfalls with it. Now, what makes me a special? Since 2016 fourth quarter, I've been a real estate investor and I've been working with motivated sellers. I've done tons of about houses that are in forbearance. I've done loan modifications. I've done short sales. I actually had a brokerage firm that created so much leads for short sales and loan mods that I would outsource it to other brokerage companies because we were getting so overloaded. So I have a lot of experience when it comes to short sales, forbearance, people being behind in their house payments, and real estate investing. Now, what I've seen in the last crash is probably going to be very similar to what I'm going to see in this crash, okay? Which is people are going to create forbearance programs, and end of the day, the homeowner is going to be in massive trouble and they're going to lose their homes. Now today, they're making forbearance more easier because of government regulations, because of Fannie Mae and Freddie Mac and the loans that they provide. However, what most homeowners don't know, that one of the pitfalls is that when they do a forbearance program, even though the regulators want the credit bureaus not to report it as a delinquency, not to hurt the homeowner's credit, I am seeing actual evidence that homeowners that already have filed for forbearance program are getting hit on their credit score a ding of anywhere from 75 to 100 points off their credit. So even though they're in a forbearance program, they're in a program where the bank allowed them not to make payments, the seller is also getting hit on their credit. Again, 700 to 100 points, somewhere around there, just by not making payments. The other big pitfall is, besides hurting that homeowner's credit, is that at the end of the program, after the end of the 3 months, right, the seller, aka borrower, has to pay the bank not only the 3 months that was behind, plus the next month that they're going to be in, 4 months up at front. Now think about it. If a homeowner couldn't make 1 month payments, how are they going to come up with 3 payments behind, plus that current month they're going to be in 4 payments all at one time? So for example, if someone's payment is $1,000 a month, which I don't know any people that have mortgages for $1,000 a month, at the end of the forbearance program, they would have to come up with $4,000 to pay the 3 months in the arrears that they skipped, plus, check this tree out, guys, right? Pretty cool, right? They got to pay the 3 months in the arrears, plus that next month that they're going to be living in, which makes the 4th month. So $4,000, you know, maybe the banks will remove the late fees and etc. Now, some people don't realize that in the forbearance program, they could, you know, I don't want to say argue, but debate and be persistent with the servicers to say, look, I want to put that 3 months in the back of the loan. Because by default, many banks, whenever they call them, when a borrower calls the bank, if they work out a forbearance program, they're going to make all the payments due at the very end of the 3 month, plus the next month, 4 months. However, most borrowers and sellers don't know they could be persistent on and getting that money paid in the back of the mortgage. And I'll go into why that's really a bad idea, but I think it might be a better idea, but not financial advice, not opinion, just my thoughts. If I was in a situation like that, to just make the payments and not go in a forbearance program, or just sell the home, okay? But if I had the option of paying the 3 payments plus the next month all at once versus putting it in the back of the loan, I would go with that, making the 4 payments all at once, because I'll get into it in a little bit. So to end the point number 2 of The problem is many homeowners are not going to be able to have the 4,000 in this example, the 3 months plus the next month, 4 months of payments to come up. That's why they got in the forbearance program in the first place. Okay. The other pitfall is that, again, servicers by default are going to put people in the program where they have to pay the 4 month when the forbearance 3 month grace period is over, versus putting at the end, because most borrowers don't realize that they could, put their foot down and try to work a deal where the 4 payments are going to be put in the back of the mortgage. Now, the other pitfall is that whenever the payments are put on the back of the mortgage, what many homeowners don't realize is that they're paying amortization, 30-year amortization, 15-year amortization. So by putting, let's say, $4,000, if the monthly payments were $1,000 a month, on the back, over the term of that loan, 10 years, 15 years, 28 years, whatever is left on there, that seller may end up paying $8,000, $18,000, depends on what the interest rate is on their loan and when they're going to pay it off, but at least 3 times the amount that they have borrowed, if not more. And so a monthly payments of $1,000, by the time you put it 4 months in the bank, by the time the mortgage retires, by the time the mortgage is finished, right, that seller's going to owe maybe $10,000, $18,000 additional because of amortization. Most people don't realize how amortization works. The way it works is that for every payments you make to the stinky bankers, the very big chunk, the lion's share, goes towards interest versus principal reduction, which is basically your debt balance, the borrower's debt balance, not you, the borrower. So there's many different pitfalls for the forbearance program. And since 2016, I've been calling out and shouting at the top of my lungs that we're going to have a tsunami of foreclosures, that we're going to have massive stock crashes. And one of the inventories that are going to come that's going to be so overwhelming is all these people that are going to go in the forbearance program. And then at the end of the term, they're not going to have the money to come up with. And then their house is going to go to the foreclosure. And then the bank will get to own it, REOs. And the bank's going to have so many of these properties, right, that homeowners are now competing with banks to liquidate property. Okay. Now, the borrower may be able to do loan mod or short sell after the forbearance, but again, their credit is going to be totally dinged up as more options are exercised. And back in the last crash, the odds of a short sell being done by an average real estate agent are very slim. If you're a pro like we were, the odds are still slim, but a lot better than if you're just a homeowner, or if you're just an average real estate agent and you don't know what the hell you're doing. You're doing your first short sell, you're doing your 10th short sell. Unless you've done a lot of short sales, like we've done short sales from multi-million-dollar penthouses all the way to average single residential homes and condos and etc. So we have a lot of experience. And let me tell you, I hate short sales. I hate loan mods. When I buy a house like that, I prefer just to take over someone's payment that's not behind versus to do a short sell, or I prefer to buy a house for cash. Say hi to my family. Hello, Alchemy. Hello, Jiga. You guys wondering what we're doing? It's Monday. We're having a great time riding bikes. We just bought these brand new bikes. Let me go ahead and show them to you guys. And we used the strategy called the new flip. So we didn't really buy them. We got them for free. I started with $100. I did the new flip and flipped it. And we got that bike. And then we got this awesome looking bike. That's my wife's. It's a smoking deal. Top of the line components in it. And so that's where we are. Now, if you're interested in getting into the real estate game, if you're interested and you see an opportunity in the 2020 economic collapse that you think that real estate is the play for you, then consider getting my profit sharing coaching, where I hold your hand, I answer every and all your questions, and I work directly with you to do one deal where we split it 50-50. The cost is only $3K. It's not for everyone, right? But here's the great news, amazing news. Besides me working with you direct to be able to do your first deal, I also give you all your business tools that you need. $9,500 worth of tools that I give you, which includes like your websites, how to generate leads for free, your offer letters. I mean, I just so on and so on. Just go to mrnofluff.com, click on the mentoring, and then click on profit sharing. You can get the details there. Again, it's 3,000 bucks for 1 month of coaching. If you decide you want to continue working with me for after the 1 month, I got amazing news too. It's only $119 after that, guys. So $3K to get started for 1 month. If you want to stay around like 5 years or 3 months after that, so only $119 a month, and that's it. And the amazing news is you get all your tools that most people have to pay thousands of dollars for, and that's my gift to you. Now, if you're someone that wants to do it by yourself, like you love to read self-help books and you can figure it out by yourself, then consider going to mrnofluff.com, click on the shopping, and download all my products, guys. These are the exact tools that I use for my business to create my self-freedom, and I'm giving you 25 years of my brain. You could just download it, okay, without any fluff, without any sugar, any of that stuff. And again, all my stuff is to help you make money without you getting into debt, without you spending a whole lot of money. I love creativity, imagination. I'm a refugee to America, and you know, again, I've started all my businesses with basically $100, if not a little bit more. Some I had success in it, made multi-millions. Some I had failed in it, but better to start with $100 than $100,000 debt or $200,000 hard money or credit cards or whatever, guys. So thanks for watching. Click the like button. Remember, mrnofluff.com. I got the best sell of the year right now at most of my courses. So if you're interested in real estate, you want to buy houses subject to, you want to buy houses owner financing, lease option, creative financing, whatever you could imagine. You want to buy them cash, you want to do fix and flips, you want to be a landlord, you want to have passive income, you want to learn how to wholesale, I'm your guy. I can hold your hand, help you cross the river, and show you the best trails. Peace.